we will start our regular second Saturday webinar now. Finally, after 20 months of consolidation, Nifty has broken the consolidation level and has touched a new all-time high. Almost all the indices, large cap Nifty and Sensex, then mid cap indices, small cap indices are at all-time high level now. Markets are under bullish control now. Even if correction comes, it will be only short-lived. We feel that still a lot of steam is left in the current bull run. We expect at least for the next 2-3 months, market will be in positive. So the rally is not yet over. Generally, in bull market, correction used to happen. Even if correction comes, it will be sharp, but it will be very swift. Correction will be very short term and it will bounce back quickly. So we expect that markets are under strong bull grip and it has scope for further upside. The main reason for the strong uptrend is foreign institutions were buying heavily. Last 2 years, what it was happening was that entire FY22 and FY23, foreign institutions were sellers, retail investors and domestic mutual funds were buyers. Now, what has happened was that foreign institutions turned into buyers and mutual fund and domestic institutions, they were just selling at higher levels. They are not forcefully selling. That is why markets are going up. We expect that the foreign institutions buying will continue in coming days also. Global markets also stable. There are marginally some corrections are there. In spite of all the rate hike and all the recession expectations, global market did not collapse. Even some of the markets, some of the countries like Germany and other European countries where recessions were expected, even in UK, the stock market are very stable. They are either at all-time high or near to all-time high. So there is no collapse in global markets in spite of all the recession news and rate hike news. Domestically, if you see, one biggest positive that has happened between last month and this month was that monsoon has revived strongly. At least for the month of July, it is expected monsoon rain will be very good. So whatever deficit we had in the June month, it will get the monsoon rain, whatever loss it was made in the month of June, it will get in the month of July, and overall June and July end, by July end, monsoon is expected to be normal. So that is one big positive, because till June 15th, the rainfall was very less. Almost at one point of time, it was 40-50% below normal level. As on yesterday, it is just 3%. We expect that even that 3% will get covered in next 1 or 2 days. So that is one biggest positive that has happened between last month and this month in our economy. Last 1 month, we had a very broad-based rally. Almost all sections of market has participated. If you see that Nifty and Sensex 4% up between last meeting and this meeting, and mid and small cap around 5.5% it has gone up. From April 1st, market has seen a very good rally. Almost in the first quarter of FY24, most of the portfolios has gone up very sharply, and whatever loss it was made in the last before March, that has almost made up in the first quarter of FY24. So most of the investors were happy because of market rally, and we expect that the market rally will further continue in coming days. Intermediately, there may be some corrections, but it will be only short-lived. That is what our expectation is as of now. And this is the Nifty chart. Almost we had 20 months of consolidation in Nifty, which started in October 2021. And now that has been broken. Almost 5 days of very strong rally we had in Nifty. Generally, this type of very strong consolidation breakout will end very positively. If you see the Nifty chart, we have almost 4 days of sharp green candle was there, which means that Nifty has broken a very strong breakout. Technically, it means. Yesterday, some marginal correction was there, but we feel it's a normal technical correction. Nothing to worry about that. Even it may continue for a few days. Nothing to worry. Finally, again, new high will be made in Nifty indices, even in mid cap and small cap. This is the foreign institutions flow, and if you see that FY22 and FY23 they were sellers. FY22 they sold 18 billion, FY23 almost 5 billion they sold. But in FY24 first quarter and July first week, if you see that almost 12 billion of inflow has come in, and because of this inflow, market has gone up very sharply. Mutual funds and domestic institutions, they were sellers at higher level, but they are not aggressive sellers. They were selling at higher levels only. But FIs, they are continuously buying. That has pushed up the market sharply. In mid cap and small cap, plenty of action is there. Plenty of action. Lot of stocks also going up on speculative basis. So we have to be very careful on stock selection. So one interesting thing I have observed in the last 2 months is that if you see there are two types of financial investors are there. One is that they invest in equities, which is a volatile investment. It will go up and down, but it will give higher return than the fixed income. The other one is the fixed income, where people put in debt funds or in bank deposit. The bank deposit or in NBFC deposit, where they will get fixed type of income. And what is interesting is that because of sharp rallies, most of the mutual funds and personal portfolios has done very well, and equity investors were happy. And because of hike in interest rate in the last 1 year, fixed income investors also happy. They are happy to get a interest rate of 7.5 in PSU banks, and in NBFCs, AAA rated NBFCs like Bajaj Finance and Sundaram Finance, they are giving around 8%. So fixed income investors are also happy. And very rarely we used to find that both equity investors and fixed income investors, they satisfy. Because most of the time what used to happen is that equity investors, they used to do well because of market doing well, because of low interest regime. But fixed investors, they may not be happy because their interest rate will be low. 2 years back, what happened was that interest rates were very low. Even PSU banks were offering just 6%, and liquid funds were offering just 4.5%. Now both has gone up. Even liquid funds are now giving 6.5% return, which means that fixed income investors also happy. And equity investors, because of sharp rally, some of the most underperforming mutual funds also, they are doing well now. And equity investors are also very happy. Rarely we find periods where both section of financial investors, that is equity as well as fixed incomes investors, were satisfied. And right now, both sections were satisfied now. That is one interesting fact I'm observing. Generally, when market used to go up, what used to happen is that a lot of IPOs used to come. Right now, what is happening is that a lot of block deals are happening in the market. Generally, who is the seller? If you see that PE players, private equity players were seller. In the last 4-5 years, if you see that lot of companies got listed where PE players sold their stake partially during IPO. The balance stakes were held by them. Now market has gone up, and they sell a huge quantity in the block deal. And if you see that they used to sell 5%, 10% like that, they used to sell big chunk of shares. They used to sell it, and in the last 1 month, in the last 2 weeks, especially if you see that there are plenty of block deals were happening, especially in the last week of June, the quarter ending week, where there were plenty of block deals were happening, and most of the sellers, if you see that, they were mainly PE players, and promoters were also selling it. Very interestingly, I found that one of the MNC companies, that is Timken, which is a US-based MNC company, the manufacturer of ball bearings. That promoter also sold some stake in the last week of March. That is very surprising. And promoter and mainly PE players and promoters were selling in the market, and many of them were telling that generally most of the block deal used to happen at the market peak. That is partially correct. Generally at the peak of the market, they try to seize the bull market and sell maximum quantities. They will sell it, but as far as I am is concerned, what I have found in the last 15 years is that most block deal used to happen at the market turnaround. It can happen at the market peak also. Similarly, it can happen at the start of the new bull market also. It used to happen. And it could either be one, since a number of block deals were happening, many of them were warning that most of the PE players were exiting the market and promoters were exiting the market. It could well be the sign of a market peak, but there could also be that it could be a start of a new bull market. It could either be there. So we cannot say that it is only at the market peak block deal used to happen. And only time will tell whether a market peak we have found or it's a start of a new bull market. Only time will tell. But as far as our reading on the market is concerned, the bull market has more steam left, and it will continue. And this is the monsoon update. Monsoon has recovered, as I said in my initial notes. June ended, if you see that the total rainfall deficiency is 10% when compared to long-term period average. But now IMD has forecast July to be normal. In the first week of July, we had a very good rainfall throughout the country. And if this is the below chart is the monsoon rainfall details. At one point of time, by July 9th, if you see that almost 60% deficiency was there. Now it is gradually get covered up. And if you see that as on yesterday, the departure against the long period average is just 3%. And I expect that in the next 2 days, maybe another 1% it may get covered. So in the, by Sunday, tomorrow evening, monsoon deficiency may either be -1 or it could be 0. That means it's a normal rainfall. And IMD has forecasted that July to be the normal month, and most of the India will get good rainfall. That is what their forecast is. Even today in Business Line, I read that US Climate Agency, they also has forecasted that throughout July, the rainfall will be good. That is what their latest forecast is. So by July end, what is going to happen is that the rainfall, monsoon rainfall will be normal. And totally 4 months are there: June, July, August, September. 4 months are there. So July will be the half of it. By half of it, the rainfall will be normal. Actually, market has prepared for below normal monsoon now because of the forecast and late start of the monsoon. Market has almost discounted that we are going to have a below normal monsoon. Suppose if rainfall picks up, the market may see some positive reaction because of good rainfall we are getting. It's a very interesting chart if you see that. This is the cumulative interest rate changes they have made in the last 1 year by various central banks. If you see that US Fed, they have hiked almost 500 basis points, 5% interest they have hiked in the last 1 year. Very rarely in the history of US Fed, we have seen this type of sharp increase in the interest rates. European Central Bank, 4%, they have hiked 400 basis point. Bank of England, 4.9%, 490 basis point. Japan, they have not yet reacted to the interest rate changes. And China, if you see that, they have actually reduced the interest rate by 30 basis points. China, we cannot write it out. After US, it is the largest economy in the world. And when you compare the growth wise, China growth is much higher than US. And China has slowed down. In order to give stimulus to that economy, they have reduced interest rates. Here in India, we had 250 basis point hike in the last 1 year. That is 2.5%. Now, what is expected in the coming months is that US Fed may hike by another 1 or 2 times. Another 50 basis point hike is possible. 25 basis point hike is possible. Similarly, European Central Bank, 1 or 2 more hikes is left. Bank of England, it is expected that they may hike by another 110 basis point. As of now, the terminal rate they are expecting is, economists are expecting is 6% interest rate. That means another 110 basis point hike is expected on Bank of England. So almost all Western countries, the 1 or 2 more hike is expected in coming months. US Fed, July 26, they are going to hike interest rates. Their US Fed is meeting, and most probably they may hike 25 basis point interest rates. The recent jobs data were very strong, which means that July 26, definitely there is going to be 1 more hike by US Fed. Whereas Reserve Bank of India, the rate hike is almost over. No one is expecting further rate hike. Now there is a debate going on when they are going to do rate cut. Initially, it was expected that by October, November, December period, they may come out with 1 rate cut, and in January, February, March, they may have another rate cut. But now, since due to Western countries, there are 1 or 2 more rate hikes there. This Q4 calendar year 2023 rate cut may not happen. So only 1 rate cut may happen next January, February, March period. RBI may do 1 rate cut, but rate hike is, as of now, it is rolled out by RBI. Whereas the Western countries, 1 or 2 more rate hike will happen. So there is a big divergence is happening, where Western countries, the rate hike may be coming, whereas the Asian countries, China, either they may cut rate or they may hold on. Similarly, RBI, either they may hold on and they may cut rate by January, February, March period. Bank of Japan, they are unlikely, they may remain status quo. On valuation part, if you see that the market has gone up very sharply, it is not in a bubble territory. As of now, the Nifty 50 PE ratio is around 22, Sensex is around 23. So previously in 2008 and when the market peaked out, the PE ratio was around 27, 28 range. Market peaked out at that time. So still 20% less than what we had during the 2007-8 period from the peak valuation. This is the current valuation. Whereas if you see the forward earnings, the Nifty PE is now near to around 20. It is nearing now almost 1 standard deviation higher than the average. Generally, we used to have the mean level of 17 PE. Now it is near to 20 level. That means market is overvalued, but not in a bubble range. That is what it indicates. And if growth comes, means then valuations may reduce it. Since it is not in bubble range, many are buying that because many foreign institutions were buying that. Rarely we find growth in the world, and they are ready to pay higher valuation, because last 2 years, 3 years, 5 years, most of them waited to enter in India. Because of high valuations, they stayed away. Now some of them were losing patience and they are coming back. So historically, if you see the forward earnings, the market is 1 standard deviation higher than the mean value. That means market is overvalued, but it is not in a bubble range. That is what the valuation parametrics are indicating. Global markets, very interesting to see the forward looking price to earnings ratio when compared to their average earnings. And if you see that most of the countries, if you see that they are trading well below the 10-year average. Some of the countries like Turkey, Pakistan, Kenya, they are trading far below than 10-year average. All these countries have some issues. If you take Pakistan, if you take their interest rate has gone up very sharply. More than 20% interest rate is there in Pakistan. Inflation also very high. That is why the valuations were lower. And some of the countries like Germany, China, big economy countries, even they are trading below the 10-year average. They are trading. France and entire Europe, if you see, they are trading below the 10-year average. On the other hand, if you see some of the countries like US, India, they are trading above the 10-year average. As I said previously, previous chart we saw about India, one standard deviation higher valuation we were trading. And whereas US also, if you see that, it is trading at a higher valuation than 10-year average. Now it is trading at 19 PE, whereas 10-year average is 10 to 15% lower than that. And one of the interesting chart country where it is trading at higher valuation is Japan. And if you see that in the last 6 months, Japan has made a sharp up move. Japan Nikkei has made a sharp up move. Even very shrewd investors like Warren Buffett, they have taken a huge positive view in Japan, and they have invested heavily in Japanese stock market in the last 6 months, and they are expecting that the Japanese market to do well. And valuation wise, it is higher than the 10-year average. Developed markets overall, if you see that it is trading at a higher valuation. Mostly in developed market, most of the most of the market cap tend to come from US and Japan only. That is why, since these two countries are trading above the 10-year average, overall developed country valuation is higher now when compared to 10-year average. Whereas frontier market, it is trading below the 10-year average. Another interesting thing that is happening is that the stress between US and China is going up day by day, because the US don't want China to grow very sharply, because now, as of now, China is the only economy which is a competitor to US. So the US does not want China to grow much, and because of that, both US and European countries, they are trying to de-risk their supply chain, and they are trying to buy from various countries, and India will be one of the beneficiary. I will tell that India will be one of the beneficiary. It is not the only beneficiary. Many Asian countries like Vietnam, Philippines, even Bangladesh, they are benefiting a lot from China plus one strategy, which is adopted by US and European countries. And some of the textiles and all, US and European customers they are mostly buying from Bangladesh. Though India has gained but the gain made by countries like Vietnam and Bangladesh is far higher than what India has gained. But in coming days, India will be one of the beneficiary because of US-China relationship stress, and it is up to India to seize the situation. If we give supply products to US and Europe at a very competitive rate, definitely our market share will go up, and for that, Indian companies has to work hard. It is not only the Indian company, but also government support also may be needed on providing enough infrastructure as well as liquidity to the companies in India. It will be a collective work by government, by company, by Indian companies, and government means both central and state government. And if all work good means, then India will be one of the major beneficiary because of this stress between US and China. And if you see that lot of big MNC companies are coming in India, they are putting the dedicated manufacturing plants for exports as well as for imports. For example, Apple, recently they opened 4 sales sales office where they were selling their products. And if you see that they're planning, they are putting up a lot of manufacturing base in India for exports as well as for import substitution. They are doing it like that. Many MNC companies are very much interested in India. Even Tesla is likely to put one plant in India. So like that, a lot of talks are happening, and some in groundwork also some works are happening where many agreements are signed. Even in Tamil Nadu, if you see that, lot of agreements are signed between many MNC companies and Tamil Nadu state government for putting plants in Tamil Nadu. And many MNC companies, they want to de-risk their manufacturing base. In India, we have two positives. One, there is a big domestic market is there, as well as some of the products manufactured here will be exported. And the PLI scheme is the PLI scheme which was announced by the Modi government a few years back, and that also will help in putting new manufacturing plants. That will attract a lot of MNC companies. And another positive, if you track the market very closely, we can see that one segment of market is doing very well, which is nothing but the capital goods segment and the infrastructure stocks. And the main reason for that is that central government in the budget, they are continuously pushing for capex. And if you see in the last 7 years, if you see that the capex is continuously going up. Between FY16 and FY20, there was not much change in the government capex. But whereas from there on, if you see that there was sharp increase in government capex is happening. FY20, it was 3.4. So when COVID came, when private companies were hesitant to make investment, government started investing heavily, and almost 4.3 lakh crore government has spent in FY21. FY22, almost 5.9% government has spent from 4.3, a big jump. And FY23, if you see the last year, almost 24% jump was there. From 5.9 lakh crore, it has gone to 7.4 lakh crore. And it is almost 7.8% of overall capex. Overall government spending, 34 out of 34.5 lakh crore last year, government has spent in capex is 7.4 lakh crore. For next year, the budget estimate is that overall spending, government expense will not come down much. It is 35 lakh crore, whereas capex from 7.4 lakh crore, it is going to be 10 lakh crore. And generally, the capex is very positive because it will have a multiplier effect. Many times I have told it that suppose if a government is instead of giving subsidy, if they build a bridge, means what will happen is that by building bridge, government will buy steel, cement, and other raw materials. That means our cement company will do well, steel company will do well, logistics will do well, lot of laborers will get employment. Apart from that, it will increase the productivity also by creating infrastructure. Productivity in the economy will overall increase. So the multiplier effect will be there much higher in capex push spending rather than normal spending like giving subsidies or giving money freely. So the capex related spending will boost the economy. It will have a multiplier effect in the economy. And if you see on the right hand side, the revenue expenditure, capital to capital expenditure, it is coming down. The lesser is positive because the denominator we have capex is there, which means if capex goes up, means the denominator will come, the denominator will be higher and ratio will come down, which will be positive. between 2018 and 21, if you see that it was around 7, that has come down very sharply to 3.5. So revenue expenditure to capital expenditure falling is a positive. That is why if you see that some of the companies in capex segment, ABB, Siemens, capital goods related companies, BHCL, some of the mid cap companies like TD Power, they are all doing very well. And infrastructure, if you see that L&T has touched a multi-year high, it is at all-time higher level. Because of the government capex, it is going up. These stocks are going up. So overall, the news flows are positive, but one risk that we should always see is that 1 week back, one of my friend is a mutual fund distributor in my native place. He's there in the market for more than 30 years. He was in a big position in UTI mutual fund. When the US 64 problem came, and UTI mutual fund, they sacked most of the employees. Most of the employees were given VRS, not sacked, VRS. He came out and he started his own distributor. And he has a very good experience in the market. He has almost 30 years of experience. I had a chance to chat with him 10 days back. He said that right now there is no negative in the market. Crude oil prices fell. There is further no more rate hike by the RBI. And next year, Modi will come with a big majority. So there is no risk for the market. Market will go up. So what I feel was that if somebody started feeling that there are no risk in the market, we can invest safely, means that is a big risk, I feel. Because blue sky scenario should never be there in the market. Market means there should always be risk. Only during the bubble time, when everyone start feeling that market will go up upside only, means that is the time we have to be very cautious. Right now, I'm hearing from some of the long-term investors who are in the market for many years. They have started telling that there is no risk in the market, so market will go up. Means we have to be cautious, but that has to be told by everyone. Right now, the retail sentiment is not euphoric. Retail investors who are in the market currently, they are the ones who are investing. But there are another section of retail investors who come and go out of the market. There is a separate section of retail investors. Most of them came in during 1991-92 Harshad Mehta time. They came in, and when market fell, then they went out. Again, they came back in 98-2000, 99-2000 time during dot-com bubble. They came in. When market fell, they went out. And similarly, 2007 time they came in, they went out. So there is a section of retail investors, non-active retail investors. They tend to come in the market only when market is at a peak or near peak. So that section of retail investors has not yet come into the market. When most of them, when market goes up, when most of them start earning money, they share it with the friends that I have earned 5 lakhs, 10 lakhs in the last 2 months, 3 months, means naturally what will happen is that most media will start flashing that market is doing well. Then the inactive, non-active retail investors, they start coming back into the market. Non-active retail investors plus the first-time retail investors, they will start coming into the market. So only when they start coming into the market, we have to be very careful, and some caution we have to face in. Right now, that situation hasn't come now, and those who are in the market, retailers, those active retail investors, they are only in the market now. So there is no so that euphoric period we haven't reached now. That is why I am confidently saying that we haven't achieved the market high. And what my feeling is that till Diwali, market will do well. Next that till elections, because next year general elections are going to come. Next year, general election is going to come in the month of May, and post Diwali, market will start seeing some volatility. Right now, most of the are feeling that the current government will gain majority. But in politics, anything can happen. We cannot take it for granted that who will come into power. Only at that time only we will come to know. So after Diwali, the political volatility will get reflected in the market, and we may see some those who got profit in the last 6-7 months, they may start booking it, and some of the new investors may come in, and market may see some volatility. And till then, my feeling is that next 2 months, 3 months, market will do well, and some of the non-active retail investors and fresh first-time retail investors, they will enter the market during that time. And good results, peak valuations, they are the lethal combination for market peak out. Not only market peak out, even for individual stocks also. Many times I have seen is that good results, that a company will come out with a very good results, and the valuation also will be at peak, which means that the stock price will be at a very highest level. Generally, during that time, most of the stock used to peak out. In the last 10-12 years, I have seen it in many individual stocks, and that will play out in coming months also. Results will be good, and seeing the results, most of the retail investors, they buy the shares telling that results are good, but valuations will be at a peak. So we have to respect the valuation, and we have to see how much good results company can post this result. After that only we have to buy. Blindly we should not see the result alone. And another important thing is that bad news will always emerge from unknown source and unexpected time. We cannot take anything for granted, and in the past many times the bad news came from unexpected sources. The sharp corrections, historically, if you see that in 1992 the Harshad Mehta scam came, nobody was expecting that scam will come in 1991, but came and fell the market. 2000 .com bubble was there, and everybody were expecting that the .com will keep on going up, and .com bubble happened. Similarly, in 2007-8, a global financial crisis came. Nobody could able to predict that. Some of them may say that I have predicted the market fall, but they were predicting the market fall from 2005 onwards. Every year they will come and tell that market will fall now, market will fall now. Nothing happened for 2 years, 3 years, and suddenly it fell in 2008, and they were claiming credit that we have predicted the market fall. Similarly, COVID fall, if you see, no one could able to predict that COVID will come. So bad news will always emerge from unknown source, and it will come at an unexpected time. So that is why you have to do proper due diligence. What will happen in the market is that market will go up. In bull market, many times we used to have a sharp correction. We used to have. We don't know whether it's a start of it is the end of the bull market, or it's a just correction in a bull market. At that point of time, we don't know. So for that, to hold the stock with conviction, we should understand the company. We should understand the company business model well. Then only during correction time we could be able to hold it with a conviction. Right now, what is happening? Many mid and small caps are seeing a lot of euphoric move. Even yesterday, if you see that one company, a electric vehicle company, market cap crossed 10,000 crores, and they told that they got a letter of intent for 10,000 crore order from an Maharashtra state transport corporation. Actually, it is not an order, it is a letter of intent, but the company told that it is an order, and the order is split between that company and a promoter company where they have huge related party transaction. Even if you see the last 2-year annual report of that company, they had a lot of related party transactions, and the stock price has gone up very sharply yesterday because of the letter of intent, and in all media it is told that it is an 10,000 crore order they have mentioned. Actually, it is not an order. It is a one step below order confirmation, that is letter of intent. And the same news has come the second time. 1 month back, the stock went up sharply based on that this is the only company left and they will confirmly get this order. At that point of time, there are no competitors in that, because they have quoted price so low that the competitors has stayed away from that tender, and they did not got selected. But this company quoted very low price and they got selected. And at that point of time, the stock went up very sharply. Now, letter of intent, they got it. For the same news, the second rally has happened. And most probably after 1 or 2 months, suppose if this letter of intent converts into order, again the company will tell that we have got a 10,000 crores order. They will tell that. For that also, it will go up. But my feeling is that the company could not able to fulfill that order because they don't have necessary infrastructure to do it, as well as the balance sheet is not so strong to fulfill that order. Only time will tell that. This is my reading. I will go wrong. So like that, lot of stories are happening in the market, and markets a lot of themes are told to justify high valuations. And very interesting fact I'm seeing in the last 1 month is that 2-3 small cap IT companies, where stock price has gone up very sharply in the last 1 to 2 months, they started telling that they have started giving to FY27 outlook. We are in 24 now, FY24 now. 3 years down the line, they have started giving outlook that in 3 years our revenue will go up by 2 times, our profit will go up by 3 times. Like that, companies started giving 3 years, 4 year visibility. They have started giving, where they have done very badly in the last 10 years. And the stock price also reacting to that. And many are coming in TV and they are telling that FY27 the profit will go up by 4 times in the next 3 years. And based on that, the valuation look very cheap. Like that, many started giving justification. So we have to be very careful. 1 or 2 company may get correct, but suppose if correction comes, means how many of them could be able to hold that share? Only if you have conviction, you can hold that share. So do proper due diligence. And another interesting fact that is happening in the last 1 year, which is the new normal, is that the uptrend and downtrend are very sharp. Uptrend stock price are going up 100%, 150% in the matter of 1 month, 2 months time. The same way, some stock could also go up by 40-50% within 1 month, because what can go up can come down. That is the new normal. Suppose if you don't understand the company when correction starts, you don't know what to do it, whether you have to exit it or you have to fold it. For that, only if you know about the company only, you could able to ride it. Also, many clients, they call me for recommendations. I used to tell whatever I know. Many of them used to call, used to ask me, give me some multi-bagger stock names so that I could buy it and I will get multi-bagger returns. Like that, many clients used to ask me. Actually, see, multi-bagger stock, no one knows while buying that it will become a multi-bagger stock. When Jujunwala bought a Titan at 130 rupees in 100 rupees, that is pre-split, I am telling, in 2003-4 period. I was also in the market at that time. He bought heavily at that time this Titan. He was buying from 50 rupees, he was buying it. Even at 120 rupees, 30 rupees, he was buying it. BEML also he was buying at 100 rupees, 150 rupees, he was buying it at that time. And when he bought at that time, he may not be knowing that the Titan will become 10 years down the line, 15 years down the line, it will become 20,000, 30,000 rupees stock adjusted for split. I am telling when he bought for 50 rupees, 100 rupees. Multi-bagger stock, no one knows while buying, but you have to track the company business, and if it is going up, you should hold on. So for buying a multi-bagger stock, one of the biggest criteria, major criteria is the entry valuation should be less. Titan, when Jhunjhunwala bought, the valuation was extremely low at that time. 100 market cap basis, it was very low. Just they were starting the Tanishq business at that time. Mainly the watch business was there. Most of them do not know that they are having the gold jewelry business. Even I do not know. I was an ordinary retail investor at that time. I do not know that Titan is having a Tanishq, because there was no internet at that time. So I do not know. Internet was just coming in India, and there was no NSE BSE website was there. Even if it was there, the access was difficult, and the cost price was very high. We have to go to browsing center and we have to browse it. And I do not know that Titan was having this Tanishq business. I was thinking that why Jhunjhunwala was buying this Titan at 100 rupees, 130 business for the watch business. But he did some calculation that the organized jewelry will do well, and he was tracking that company, and that has become multi-bagger. The entry valuation should be less. That is what I am meaning. If you buy a stock at a 40 PE, 50 PE, 100 PE, and you want to expect that it should become a multi-bagger, means it won't. The chances are very less. It can go up by 2 times, 1 or 2 times or 3 times, but 50 times, 100 times multi-bagger for to happen, entry valuation should be less, and company should show good growth. That is the second criteria. And third criteria is that valuation re-rating has to happen. The Titan, it was trading around 10 PE, and now it is trading at 70, 80 PE. So from 10, 15 PE, the valuation re-rating has happened to 70 PE. So the growth has come. Valuation re-rating has happened, which led to the multiplier movement in the stock. So the multi-bagger stock, no one knows while buying that it will become multi-bagger stock, and only time will tell that it has become a multi-bagger stock. In my life, we have recommended many multi-bagger stocks in from Capstocks. One very good example is that Avanti Fits, where we recommended when the price was 150 in 2012-13 period, and the stock was available at 767 P only. It was available. By 2017, it went to up 10,000 rupees after splitting. I'm telling post corporate action adjustment. At that time, it was trading around 33, 34 PE. So from 7 PE, it went to 34 PE. In between the four years, the company EPS growth was a huge growth they have shown. So valuation PE ratio has gone up. Similarly, earnings has gone up. So these two combined together, it will lead to a multi-bagger stock. On other news, if you see that the Singapore Nifty, where most of them used to track for many years, that has been stopped from July 3rd onwards. From July 3rd onwards, now the Gifty Nifty has started. There was some issues between NSE and Singapore Exchange that NSE don't want to renew the agreement with the Singapore Exchange, and Exchange was about to stop. But after some negotiations, now what has happened is that previously the Singapore Nifty used to trade from Singapore Stock Exchange, and clearing will be done by both trading and clearing will be done by Singapore Stock Exchange. Now after the agreement between NSE and Singapore Stock Exchange, now trading will happen at NSE International Stock Exchange, that is in Gift City in Gandhinagar, Gujarat. They have set up an NSE has set up an NSE International Stock Exchange here in Gujarat in Gift City. And there was an agreement between Singapore exchange and gift and NSE, that trading will happen from NSE International Stock Exchange in Gift City, whereas clearing will be done by Singapore Stock Exchange, and both revenue and expenditure will be split around 50:50 between Singapore Exchange and NSE. Also, there is no STTC, whatever the tax tax benefits that investors were having while they were trading into Singapore Exchange, that will continue in the NSE International Exchange also. That means there is no STT, CTT, that is commodity transaction tax or security transaction tax or whatever other taxes are there. As well as there is no capital gain tax will be levied by the Indian government for transactions happening in the gift city. The Gifty Nifty is having. And who can trade into that is that resident investors cannot do trading in the Gifty Nifty. Only foreign institutions can do it, and some sections of NRIs were allowed to do trading in the Gifty Nifty in the Gifty City. The timings morning 6:30 to 3:40 p.m. The second session 4:35 p.m. to 2:45 a.m. It will happen almost throughout the day except 3 hours. The entire day the trading will be happening. And the another important observation is that previously Singapore Nifty used to give a huge lead on how our market will perform. But if you see in the last 6 months, the relevance has gone out. Singapore Nifty many times used to be so very positive, but our market opened at negative. Similarly, Singapore Nifty used to be negative, but our market opens as positive. That has started happening in the last 6-7 months, and the relevance of watching Singapore Nifty has come down recently. We have to see how this Gifty Nifty will do it. But anyway, the Singapore Nifty, there is no more Singapore Nifty. From here onwards, we'll talk only about Gifty Nifty for taking the leads. Another major corporate action that is scheduled for next week is the HDFC Bank mega merger. The merger has been approved by both the board, and all the relevant approvals from RBI, CB, and other whoever the regulators, they have to get it. They have got it. From July 1st onwards, the merger has come into effective. So the merger entity, they will have a loan advance of around 22 lakh crore. So it will be the second largest after SBI. SBI, they have more than 35 lakh, more than 35 lakh crore of loan advance they are having. Whereas the second one is the HDFC Bank, around 22 lakh crore, the loan size they are having. So post-merger, right now the HDFC Life and General Insurance, then the HDFC AMC, they were the subsidiaries of HDFC as of previous month. Now post-merger, what will happen is that HDFC AMC, HDFC Life and HDFC General Insurance, they will become the subsidiary of HDFC Bank. Previously, they were subsidiary of HDFC. Now they will become the subsidiary of HDFC Bank. The merger ratio is 25:42. And next week, from Friday onwards, there will be no more trading in the HDFC shares, and shareholders will get the shares of HDFC Bank. So what is more important in this is that HDFC Bank will have a weightage of around 15% in Nifty post-merger. So a very big weightage is there in the HDFC Bank in the Nifty. The second highest weightage will be Reliance, around 12%. So now Q1 results will start coming in from next week onwards. What is going to happen is that the raw material prices has come down a lot, which will aid margin in many sectors. So one sector that will see some benefit of margin fall will be FMCG. Because of one sector that will benefit from fall in raw material prices will be FMCG, where they will get the benefit of lower raw material prices. IT, it is expected they will post average results only, and banks likely to report inline results. And one segment that is going to disappoint a lot is the chemical segment. Most of the chemical companies likely to disappoint a lot because China post-COVID, they have started production on a full-fledged basis, and they are dumping chemical products throughout the world. at a very low rate. And also there is a slowdown in the US and Europe. Buyers were less and prices has come down a lot. Demand was less, and China has started dumping it. So that will disappoint a lot of chemical companies. So somebody who want to buy a chemical company, even specialty chemical company, they are advised to wait for the result and then to buy it. And one sector that may positively surprise is pharma. Most of the pharma companies, large pharma companies that are doing business in US, they are likely to surprise on the positive side. GST collection, it is going up 12% year on year continuously, and mainly economy is growing around 6%, and there is an inflation of 5% is there, which is get reflected in the collection in the GST. That is 12% growth, 6% 6% GDP growth plus 5% inflation. So overall 12% growth is there in the GST. Mutual fund flows for this month, it is not yet released, and it may be released next month. We have to see what retail investors were doing it. This is the data of the last month. SIP will continue to be stable. Bulk investment, we have to see it. Only next week only we will come to know. And finally, what we should do is that our own reading is that market unlikely to see major fall, at least in coming next 2 months. And even if it fall, means it will be only for a short term only. Market will bounce back. That is what our take as of now. Do proper due diligence before buying, as always. Because many clients will call and ask us, I bought this stock at 100 rupees. Now it has fell to 70 rupees. What is the company doing? Whether to hold it or sell it. So after price fall, one should not do. One should not research about a company before buying. Try to do it. Then only during the fall we could able to hold with conviction. And in spite of market rally, still we are finding a lot of pockets of opportunities are available in the market. Data to watch: Q1 results, then the monsoon progress we have to see. July is expected to be a good month. We have to see it. And US Fed meeting is coming on July 26th. And our expectation is that they will hike interest rates by 25 basis points because the job data are very strong. Q1 results will make individual stocks movement, and we have to closely track the Q1 results. So this is the presentation. Now we will see the recommendations as well as some charts are there, because right now market has gone up. Many are asking, suppose if market falls, how far it will fall, and we will see it in coming presentation. Please wait. Nifty support resistance. If you say resistance, means right now market are at all-time high. So uncharted territory. Very difficult to find the resistance level because of market in uncharted territory. By a Fibonacci projection and through Gann chart only we could be able to find how far market will go. As far as support is concerned, if you see that the next Nifty strong support is around 18,880 level. Is there? The next support is 18,450. Post to that 18,100. So the three major supports are there. 18,900 level first support. It's a very strong support. 18,450 next. 18,100. On Fibonacci retracement level, if you see that also points to 18,900 level and 18,500 level. So both Nifty support and resistance points to almost same support and a support level of 18,900 and 18,500 range. This is the Fibonacci retracement level. If market turns and if it falls, means the 23.6 retracement level is around 18,900 and 18,500 is the 38.2 retracement level. On channel, if you see that Nifty is moving in a channel, That also points to around 18,900 to 19,000 level. The Nifty support is pointing. So all the three charts, what it indicates is that around 18,900 level, Nifty has a strong support level. Suppose if market corrects for various reasons, most probably it can come to around 18,900 levels. It can fall up to 18,900. Now coming into the July recommendations, if you see that, right, this month we are recommending 5 stocks, 3 stocks in the bottom of the 3 stock. If you see that, we are recommending, we are expecting that these 3 companies will come out with good results in the next 1 month, and based on that we are recommended. The first one is a contrarian call. Right now most of the institutions and marketplace are very negative on IT sector. They are very negative. They feel that IT sector will not do well. So as a contrarian call, we have recommended this HCL Tech. Many times we have recommended it, and this is the one stock 1 week back touched the 52-week high. Many IT stocks were not doing well, but in spite of that, this stock has done well and touched the 52-week high. Last 2 days, some correction has happened. We expect that the company will post decent results, and valuations are very attractive. The other thing is that every quarter they will give a good dividend, and the dividend yield is more than 4%. So one can consider as a contrarian pick and consider HL Tech. The second one is L&T. Many times we have recommended. Right now, many stories are going on in the market. If you see water purification companies like Ion Exchange, they were going up. Defense companies were going up. Construction companies were going up. And almost L&T has all the business in it. And we expect that instead of buying one companies individually, if you buy L&T, you are buying an capex theme, and L&T is an easy call to buy it, and you need less research on it. And in among large caps, we have recommended this L&T. And companies which are expected to come out with the good results is the Zydus Life. I'm expecting a very strong results for that company. The Q1 US sales has been very strong. Their business of two drugs, Revlimid, cancer drug Revlimid, and Trocandi, the generic of both these drugs. They got very good business in Q1 of FY24, and domestic business also doing reasonably well, and emerging market business doing well. So overall, I'm expecting very good positive result from Zydus Life. Moreover, the recent inspections from US FDA is very positive, and they did not got observations in that. Even yesterday, this company, US FDA, had inspection in one of their unit, Ahmedabad SEZ second unit, where they got 0 observation. 2 weeks back, also they got 0 observation in Ahmedabad SEZ 1 unit. So the track record, in the recent track record, is very good for on US FDA inspection. So Zydus Life, based on a good expected results, we are recommending it. Previously also we have recommended. Mahanagar Gas, globally the gas price has come to pre-COVID level, and we are expecting that lower gas price will benefit this company. Also good dividend yield, high, strong balance sheet company. And in spite of stock rally, we had it. We are recommending it. And Wonderla, it's a very seasonal business for Wonderla. First and third quarter will be very strong, and second and fourth will be very average. And April, May, June is a peak quarter for them. That is the first quarter. April and May, they got a very good footfalls. June, 1 week, because of late monsoon start, I feel that the June first week also would have done well, because whenever rain starts, the business used to fall a lot, and that used to happen every year. So June is the monsoon start period. Their main theme park in Bangalore and Kochi, they would have got 1 week of extra footfalls because of late surge in monsoon. That will get reflected in the Q1 results. And Zydus, MGL, Wonderla, I'm expecting good results. L&T is an play on Capex. HL Tech is a contra play. Last month recommendations, RBL Bank, Amar Raja Battery did well. Crompton Consumer also moved in line with the index. JM Financial and Hindustan Aeronautics, they have done averagely, but overall it has given 4.77% return, around 5% return given, mostly in line with the Nifty and large and small cap indices. So this is my presentation. If you have any queries, just type it. I can answer it.